Hello everyone, this is Anrich Marais and welcome to another video. In today's video, we are going to look at the tax consequences in South Africa on cryptocurrency. Let's get into it. So let's start off with looking at what is cryptocurrency or crypto. So cryptocurrency is a digital currency that can be used to buy goods and services. Cryptocurrency uses a technology which is named blockchain. Blockchain is basically a decentralized technology which is spread across many computers that manages and records transactions. And part of the appeal of this technology is its security. So if you think of a big ledger, it's a big ledger that contains a lot of transactions, and these transactions are recorded in this ledger, and it is spread across many computers. So as it is spread across many computers, there are many people that can basically track the transactions or check the transactions for correctness, and that makes it more difficult for someone to come up with fraudulent transactions because it is not controlled by any one person. It is decentralized. It is one big ledger that is managed by many people across the world, and many people on different computers that basically do the checks and the balances on these transactions and that make sure that these transactions are legit. So it's decentralized, it's a digital currency, and you can use it to buy goods and services online. All right, what kind of transactions would crypto typically be? So you can buy cryptocurrency. An example of cryptocurrency is for is Bitcoin or Ethereum or any one of those kind of digital currencies. So you can buy and sell these currencies. There's also a few strange name transactions like a hard fork, and what that is when you split one cryptocurrency into two or more separate ones. Also airdrops, where a new cryptocurrency is sent to owners of an existing cryptocurrency. So say you have one cryptocurrency, and as part of a crypto transaction, you receive another cryptocurrency. Also staked rewards. So what on earth is staked rewards? Staked rewards is a kind of interest that you will earn on a cryptocurrency. So if you see having a cryptocurrency as a tree, then the staked rewards will be the fruit that is growing on the tree, or in the investment world, the interest that you will receive on an investment. There's also other specific developments. Cryptocurrency is newish in our generation. It's still in development, and we have seen that additional cryptocurrencies have also been developed and introduced to the market. So how do you pay tax on crypto in South Africa? SA tax residents are taxed on their worldwide income, and this includes cryptocurrency gains and also the income that you may receive from cryptocurrencies. So this is important. So as a South African resident or a deemed resident of South Africa, you are required to declare to SARS your income or your worldwide income. So this means you also have to declare income that you would have received from a foreign source, and one of those foreign sources could include crypto. So why would people buy crypto? People usually buy crypto like they would buy any other investment or an asset, because they think it's going to increase in value. So they want to buy it for 1 Rand today, and they expect it to increase to 2 Rand, say within a month or within a year, and thereby they would have made a gain or they would have grown their money. So do I pay tax for holding crypto? You don't actually pay tax if you just hold the crypto, and if it sits on your wallet at the end of the year, you don't pay tax on that. So what is a taxable event then? A taxable event for crypto will be when you sell crypto or when you exchange one crypto for another. So how does SARS view crypto? In the legislation today, crypto is not seen as a currency, like for instance rands, dollars, and pounds, but crypto is seen as property similar to your house or your car. I want to now look at the standard tax system quickly, just to show you, according to income tax, what tax rates do individuals, companies, CCs, and trusts pay tax at. So for individuals pay tax on a sliding scale. We call it the marginal rate of tax. And you can see for individuals, on the first 216,200 Rand, individuals will pay tax at 18% on their taxable income. This can go all the way up to 45% on taxable income if an individual receives in excess of 1.65 million Rand. Private companies and trusts pay tax at a flat rate of 28% on taxable income, and trust pays tax at a flat rate of 45% on taxable income. Now let's look at the capital gains tax system. So the capital gains tax system is a more favorable tax system in that the effective tax rate on capital gains is less than it would be for normal income tax. So just to put capital gains tax in context, you will work out your taxable capital gain, and then that taxable capital gain will be included in the determination of your taxable income for determining your tax payable. So under the capital gains tax system for individuals, the effective tax rate on a capital gain for individuals will be between 7.2% and 18%. Individuals have an inclusion rate of 40% in taxable income. What that means is if you have a capital gain of 10 Rand, then 40% or 4 Rand of that 10 Rand will be included in the determination of your taxable income. Individuals also enjoy an annual exclusion of 40,000 Rand. So what this means is that of the capital gains you make in a tax year, the first 40,000 Rand will not be taxed. So this is a benefit for individuals. For private companies and CCs, a capital gain is taxed at an effective rate of 22.4%. Private companies and CCs have an inclusion rate of 80% in taxable income of their capital gain. So what this means is if you have a capital gain of 10 Rand, then only 80% or 8 Rand of that will be included in the determination of your taxable income. Unfortunately, private companies and CCs don't have an annual exclusion as individuals have. For trust pay tax on capital gains at 36%, and trust, similarly to private companies and CCs, have an inclusion rate of 80% of their capital gains into their taxable income. Again, if a trust makes a capital gain of 10 Rand, then 8 Rand will be included in taxable income for the determination of the tax payable. Trusts also don't have an annual exclusion, unfortunately. Now let's look at the tax treatment for the sale of crypto. So it is important for capital gains and for trading to distinguish between, is the sale of your crypto, is it a short term or is it a long term? So what is the difference between short term and long term? So a short term game is when you trade in cryptocurrencies, and what that means is that you regularly buy and sell cryptocurrencies. You're speculating on the market. You're buying a cryptocurrency and you're expecting to sell it very quickly or in the near future for a profit, and you want to use that profit to buy and sell again. So it's a continuous trade. It's buying and selling of cryptocurrencies, and you're doing that in the short term. So a short-term game is when an asset is held for less than 1 year, and it is then taxed at a higher marginal rate of tax, and I'll explain that a little bit later in the video. We also have long-term gains, and that is when you would have held a crypto for an extended period. This is usually when you have held an asset for more than a year, and then there will be more favorable tax rates when you sell that crypto. Okay, what is the tax treatment for the sale of crypto on short-term speculation? So if you trade in cryptocurrencies and you realize a gain, we then say that that gain will be of an income nature. So if you make profit and gain from the short-term trading of crypto, the profits are deemed to be income. The inclusion rate in the taxable income is 100%. So if you made a profit of 5 Rand on the trading of your crypto, then 5 Rand will be included in the determination of your taxable income. And the tax rates that apply for individuals will be the marginal rate of tax on a sliding scale up to 45%. So individuals can pay tax between 80% and 45% on their share trading profits from the trading of crypto. For companies, they pay tax at 28% on taxable income and trust at 45% on taxable income. And this is specifically if you're trading in crypto, so you're buying and selling crypto constantly. Okay, so this is short term. We're now going on to long term. If you bought crypto as an investment, and what I mean by that is that you bought a crypto and you're holding it for an extended period. So what the Income Tax Act says in section 9C is that if you hold an asset for a period of 3 years, the asset will be seen as of capital nature, and there is a distinction between income nature and capital nature. So if you bought crypto and you held it for at least 3 years, then that crypto asset will be seen as capital in nature. If you then sell that crypto for a profit, and what is a profit? A profit is if your selling price is more than your purchase price. So for example, I bought a crypto for 1 Rand and I'm selling it for 2 Rand. That means that my profit is 1 Rand. It's the 2 Rand less the 1 Rand. So the profit is then called a capital gain, and it is taxed at the capital gains tax rate, which is a more preferential tax rate. So just to recap, when will I realize a capital gain? It will be when I bought crypto and I held onto that crypto for a while, or a period of 3 years, or for an extended period, and I held that crypto as an investment. So I'm not trading, I'm keeping that crypto like I would keep any other investment, and I'm holding on to it and waiting for it to accumulate in value. Okay, so the CGT rates according to the entity. For individuals, the effective CGT rate will be between 7.2% and 18%. So the maximum rate an individual pays on a capital gain, the maximum tax rate is 18%. For companies and CCs, the maximum tax a company or a CC pays on a capital gain is 22.4%. For trusts, trusts are taxed at 45%, and then the maximum tax they will pay is 36%. Okay, and that is the 45% times the 80% inclusion rate. Let's look in more detail at what an inclusion rate is. So for income tax, and if you're trading, your inclusion rate will be 100%. That means 100% of the profit you made will be included in the determination of your taxable income. For capital gains tax, there is an inclusion rate for individuals of 40%, and for trusts and private companies and CCs, it is 80%. So you can see that the inclusion rate for individuals of 40% is less than the inclusion rate for private companies, CCs and trusts, which is 80%. Are there any other benefits to capital gains tax? Yes, individuals will receive an annual exclusion of 40,000 Rand from their capital gains. This means that the first 40,000 Rand of capital gains will not be taxed. Let's look at some income versus capital examples. So if you earn income from the mining or the trade of crypto assets, so typically you have mined crypto assets and now you're starting to sell that crypto assets, or you're earning interest, the state rewards from those crypto assets, then that will be seen as an income nature and included at 100% in the determination of your taxable income, and then taxed at your marginal rate of tax. If you receive crypto as payment for goods and services, that will also be income nature and included at 100%. If you are an independent contractor, so you are typically a supplier that goes to a client and you render service to them, you issue an invoice and you get paid in cryptos, then that crypto income will have to be included 100% in the determination of your taxable income. If my employer pays my salary with crypto, that will also be income and included at 100% in the determination of my taxable income. If I go and I sell crypto which I held for more than 3 years, then that sale will be of a capital nature and I can apply the more favorable capital gains tax rates. Important to note is that the mining of cryptocurrency itself is not a taxable event, as it is the same as the purchase of a house or a car. So if I'm mining cryptocurrency, I'm basically establishing the asset. I haven't yet sold the asset, I'm just building up the asset. That is not a taxable event, and you don't have to pay tax on that. It's only once the crypto you have now mined is sold, so you're physically selling that crypto or you're selling a Bitcoin, then tax will be triggered. So if you mine and sell crypto, you are involved in a business or a trade, and you will be required to include 100% of the profits in the determination of your taxable income. Also important, if you're mining crypto and you're in a trade, you will be required by SARS to register as a provisional taxpayer and have to pay provisional tax to SARS. If you're a provisional taxpayer, you have to submit 2 provisional tax returns and 1 annual tax return to SARS. I want to quickly do an illustrative example of income versus capital. For this example, I have taken an individual, John. This individual will realize the same profit, so the profit stayed the same. The only thing that is different is the period for which the individual held the crypto asset. So in scenario 1, John purchased 100,000 rands worth of crypto on the 1st of January 2021, and he sold the same crypto on the 31st of January 2021 for 150,000 rand. So this means that John only held the crypto for 1 month or for less than a month, and he sold the crypto for a profit. So thinking about what we talked about earlier, John held the crypto for a short period. So he only held the crypto for 1 month, and therefore he may be seen by SARS as a share trader for crypto, because there's a very short period between buying the crypto and then selling the crypto. The profit that he realizes, the 50,000 rand from the sale of the crypto, will be income in nature and will be included in John's personal tax at 100% and then taxed at his marginal rate of tax. So we can see that John realizes a profit of 50,000 rand. 100% of that 50,000 rand, in other words, the full 50,000 rand, is included in the determination of John's taxable income, and then that taxable income is then taxed at John's marginal rate of tax, which can be between 18% and 45%, depending on what other income John also has. In scenario 2, John purchased 60,000 rands worth of crypto on the 1st of January 2017, and he sold the same crypto, so he sold all the crypto he held on the 1st of February 2020 for 110,000 rand, and therefore he realized a profit of 50,000 rand. So what we can see is that John held the crypto for an extended period, and here more than 3 years. So then we can then say that the sale will realize a gain and that gain will be of a capital nature and then subject to capital gains tax, which is the more preferential rates of tax. So of the 50,000 Rand profit, only 10,000 Rand, which is the 50,000 Rand less the 40,000 Rand annual exclusion, will be included in John's taxable income, and not at 100%, but only at 40%, which is the inclusion rate for individuals. So we can see that John made a capital gain of 10,000 Rand. Only 40% of that will be included in the determination of his taxable income. So of the 10,000 Rand, only 40% will be included. 40% of 10,000 is 4,000 Rand, and that gives John a taxable income of 4,000 Rand from the sale of crypto. So if you compare the income nature versus the capital nature, we can see that in scenario 1, because John traded with crypto and he realized a profit of 50,000 Rand, that full 50,000 Rand would be included in determination of John's taxable income. When you compare that to the capital gains tax system, where John would have held on to that cryptocurrency, it would have given him a taxable income of only 4,000 Rand from the sale of the crypto after the 3 years have lapsed. So from this example, we can see that capital gains tax rates are more favorable tax rates. For this video, I don't provide financial advice. I only provide tax information on how the short-term and the long-term holding of cryptocurrency will be taxed. I want to thank you for taking the time to watch this presentation. If you found the presentation useful, I would please invite you to subscribe to this channel and to also click on the little bell, which is a notification. You will then receive a little notification or an email when a new video is released. I can also encourage you to follow me on my YouTube channel and to also go and check me out on LinkedIn for more future content. Thank you for your time. I'm wishing you a good evening. Thank you and goodbye.